Time now to answer some of your tax questions. Joining us today from King and Associates is the man himself, Tony King. Good morning.
Good morning. Good morning, Jen. How are you?
Good morning. I'm good. So are people getting nervous?
Good. Very nervous.
Yeah.
And upset.
Upset because of the changes in the tax laws.
That's right. That's right. They weren't expecting some of the things that are impacting them this year.
Yeah. So a lot of heartbeat moments with
anxiety.
With you. Yeah, anxiety. Exactly. All right. Lots of questions for you. First, are there any tax programs to help you pay back taxes that you failed to pay on a tax payment plan?
Well, there's no specific program to address that, but what I suggest the taxpayer does is call the Internal Revenue Service. It sounds like they already had an installment agreement. They just probably failed to make one of the payments, and that automatically will cancel the plan. I would just get in touch with the Internal Revenue Service, explain the situation, and they can probably reactivate that payment plan.
All right, we have a couples question next. My husband and I were advised when we were married 15 years ago to keep our finances separate because of his debt. We have always filed taxes separately, so I cannot be held responsible for his debt. Has anything changed that would make it okay to file as a married couple?
Well, there's nothing really new about that, but you can. The issue is that if you file a joint return as opposed to a separate return, then both taxpayers are liable for that debt if you owe. But there is something called the innocent spouse relief. So you could possibly still file a joint tax return and indicate to the Internal Revenue Service that any debt is associated with one taxpayer as opposed to the other. So they may want to consider filing a joint return if it's advantageous, but also take advantage of what's called the innocent spouse relief. Okay,
and you can use that even if you're not in a divorce situation.
That is true. That is true.
All right, next question. I am 66, my wife is 63. We get Social Security. Is Social Security taxed?
Portions of Social Security could be taxed. If that is their only source of income, then more than likely none of it's taxed. But if they have additional income, which is called provisional income, let's say they have Social Security in a small part-time job. So depending on the amount of that other income, Social Security could be taxed. If you're filing jointly, then you have up to $32,000 of additional income that you can earn before any of your Social Security is taxed. But typically, if Social Security is your only source of income, it's not subject to tax.
Okay. Right. Can I receive a tax refund if I am currently making payments under an installment agreement or payment plan for another federal tax period?
Not really. When you enter into an installment agreement with the Internal Revenue Service, one thing that you agree to do is basically give up any future refunds. Now, if the refund for any given year exceeds your old balance, then they will take the remaining balance and then send you the difference. But typically, once you are in an installment agreement with the Internal Revenue Service, one of the conditions is that you forego any future refunds.
All right. How much income can an unmarried dependent student make before he or she must file an income tax return?
Well, for this year, the standard deduction for singles, is single person, is $12,000. So a student or anyone does not have to file, is not subject to tax until their income exceeds their earned income exceeds $12,000. If you're a student or in unearned income, interest, dividends, things like that, then the limit is $1,050.
All right, and then the next question kind of goes along a little bit. What expenses qualify for an education credit?
Basically, room and board is not included, but everything else, tuition, fees, activity fees, sometimes books and supplies, as long as they are a condition of being enrolled in that school. So basically it's your tuition, your activity fees, your student activity fees, things like that. But keep in mind, and a lot of taxpayers think room and board is also subject to.
Bad.
I know, because room and board can be very, very expensive.
Huge,
right?
Yeah,
so basically it's all the educational costs with the exception of room and board.
Wow. All right, you're moving and shaking now, Tony. You're getting down to the wire. King and Associates will be here all tax season long. If you would like to submit your questions and have them answered on air, send them to taxquestions@wbaltv.com.